Mr. Jeffrey Christian, thank you for coming to our studios today. As the head of the CPM Group, I'm honored to have you because last week CPM Group released the Silver Yearbook 2012. This time we had the Gold Yearbook, now we have the Silver Yearbook. Before we go into that, I want to ask you what's going on with the markets. So, commodities down, euro went down since July 2010 against the dollar, and equities are going down, treasuries are hitting the lowest record low. Can I take your opinion about this?
Well, looking at commodities, which is our specialty,
yes.
You've got a variety of things going on. First off is people are lowering their expectations for economic activity around the world, and that's leading to expectations of lower demand for a lot of basic materials. You had oil price that we think was overly priced because there were risk premia related to Iran and the Persian Gulf in there, and those risk premia have disappeared because people are less concerned about that. So the oil prices come off. We think it's a little bit oversold at this point, but we, it's been a combination of lower expected demand and that risk premium. And in gold and silver, you've seen the prices come off because investors are backing away from this unbridled fear of imminent financial collapse. And instead, they're focusing on the prospects of an extended period for many years or decades of subpar growth in the United States, Europe, and Japan as we deleverage and pay down our debt, which would be a long-term, less volatile solution to the economic problems that we're facing. So people are moving away from the idea that they need to have gold and silver and they need to buy it at prices that were very high last year. They're waiting for bargain prices to buy their gold and silver.
And now let's go to talk about the gold and silver. Let's go to the Silver Yearbook. I'm very interested in that, and we are very happy that you sent us the report as well. And can we talk about the supply and demand trends in terms of silver? Where is it standing right now?
Right. Well, we've been producing Silver Yearbooks or Silver annual surveys or reviews since the 70s, actually, since before I took over the department. But these things have come out every year, and they look at the supply and demand. What we're seeing is that mine production is rising in silver. It has been rising actually for quite a few years now, but the increase is accelerating. With silver prices as high as they are, there are a lot of deposits that you can reopen or develop that didn't make economic sense to mine 5 years ago or 6 years ago that now are profitable to mine. So you're seeing mine production rise. You're seeing secondary recovery from scrap rise because with the high price, people are selling their old jewelry and decorative items for the silver content, aided also by economic stringencies. People need money. That with the high unemployment in a number of places, they're selling their family jewels, if you will, to earn cash. Fabrication demand has been hit. I mean, it continues to lose market in photo. Jewelry actually held up relatively well. Electronics held up relatively well. The big growth over the last few years has been in solar panels, and the solar panel industry sort of overbuilt in the last couple years. So what we saw really starting in the second quarter of last year and continuing into this year is the solar panel industry has pulled back from buying as much silver as it was and building as many panels, because what they're doing is they're selling inventories of unsold panels, and they're using inventories of unused silver that they had bought earlier to make new panels. So you're seeing some slowdown in that, but it's still a pretty dynamic area.
And looking at the international silver market, where is it coming from? Mostly, can we talk about China as the main driver in the market?
In terms of demand or supply?
Well, the demand, yeah.
The demand is really coming all over the place.
All
in
over
China,
the place.
One of the things you have to understand about China is, you do have domestic demand for silver and silver-bearing products in China, but you also have China becoming the manufacturing powerhouse. So China is the leader in solar panel manufacturing, and a lot of those solar panels are being used within China, but they're also being exported to places around the world, to the extent that the U.S. has actually now imposed trade restrictions and tariff penalties on Chinese solar panel imports. We think incorrectly, but that's not our place, So when you look at Chinese demand for silver, what you see is both domestic demand and demand for the use of silver in products that are then re-exported to other parts of the world.
And the silver prices, they continue to rally at the beginning of last year, touching record nominal highs. Price average 35.29 in 2011. What are your projections for next year, or actually 2012?
Well, you know, the prices come off. It did reach an intraday high of around $49 at the beginning of May 2011. It's down to about $27, $28 now. We think it's going to probably average around $27 or $28 for the year, but understand that the price averaged about $31.50 in the first 5 months of this year. So we're looking for the silver price to fall somewhat further in the second half of this year. We think you'll see weakness starting in June, July, August, and the price may average around $27 during that period of time.
I know this is about silver, but I cannot let you go without asking about gold.
Right.
What's happening and what are we going to see?
Well, you know, gold prices have come off.
Yeah.
We think that they probably have a little bit further to go. We expect them to come down again in June, July, August, and then come up a little bit more. I think you're seeing a couple things go on. One is that investors are still interested in gold, but they're much more price sensitive. So they're buying on dips and they're pulling back when the markets are. And the other thing, it ties in with what I was saying about the economic outlook before, is investors, I think, have moved away from this unbridled fear of imminent financial collapse, where I have to buy gold and silver today regardless of the price, to one where they are saying, I should have gold and silver in my portfolio for a long time to come, but I can be price sensitive. I can wait when the price comes down, I'll buy, and when the price spikes up, as it did to like 1790 in February, I can wait, because it'll come back down.
And you have your fund too, right?
Yes.
That you manage. What's your feedback? I mean, in terms of managing the fund and where it's going, in terms of your approach.
We're just launching the CPM fund now, which is a hedge fund. We do have some managed accounts, and what we're finding is increased interest in our form of management. I mean, we are a fundamentally driven and macroeconomically driven shop. We look at the fundamentals of individual commodity markets. We look at the macroeconomic view. And I think one of the things you're seeing is that institutional investors and high net worth individuals are moving away from black box, technically driven, momentum driven funds. And they're saying, no, I really want funds that have more of a macro-driven and fundamentally driven analysis behind their investment decisions, which is ultimately good for us.
Great feedback. Thank you so much, Mr. Christian, for coming.